Hello guys, Shahzad Rubani again. Today's video is about a trade setup of GBP New Zealand. Remember, this setup would be on a daily chart framework and pertaining to the session of 30th January 2017 onward. Remember, it is a swing trading setup and the expected or desired results may be get in a month or so. Before going into chart, there is a risk disclosure and warning statement from my side. This video is only for educational purposes and FX trading carrying margin and substantial risk. Therefore, it isn't suitable for every investors. Okay, this is the chart of GBP New Zealand. This is the daily chart. In order to know the bigger picture, I need to zoom out and see what's going on. As you can see, the candles are creeping from upward to downward. So therefore, in a bigger picture, I presume that this market is a bear market. I'm now zooming in and require my area of attention. Well, whatever the setup you try to apply, make it sure to apply it in retrospective. I mean, previously what happened, and if you applied that setup on the previous days, whether or not provide an appropriate result, this is an important thing. I'm just going a bit squeezing of this chart, and there is just a presumption that this is the downward market, this is the bear market. Before this, we were assumed that it was a buying market. This is the high, right? And this is the previous swing low. Remember, this is the previous swing low and this is the high point, right? I'm talking about the June of 2016. So from June to 2016 to onward, I'm gonna go a view. I'm gonna take a view. Remember, this is the higher low and this is the higher high. What happened when this level is broken? As you can see in this candle, this previous swing low has broken, and you can see there is about a rollover right from this up till this, right? But this sell trend from June 2016 to October 2016, as you can see, the major swings low, swing high. So we just presume that after breaking out this particular point, the market has made a fresh low, right? So here is your fresh low, right? So this is the price rejection candle and also pivot candle for me. After pointing this low, there would be a swing high for 7 or 8 days. This higher trend, which is a macro trend in the wake of bigger pictures downward trend, has come to an end after this candle. Getting points on July 2016. I'm talking about July 2016. So this is the swing high. This is the new low. This is the new high. Now I presume in a downtrend, the market will give me a pattern of lower low and lower high, as exactly what market did, which we were supposed to. like this. This is the lower high, sorry, this is the lower high of this particular high. This is the high, this is the lower high. After this lower high, there is about three or 4 days buying trend, but the buying trend has ended on this particular candle, so this may be a lower high. As you can see, the market has pattern lower low, lower high, lower low, lower high, lower low, lower high, all together up till the level, up till October 2016. So in October 2016, the market has posted the low one, right? The lowest point, I would say. Okay, I put this horizontal line from this to this. So this is the lowest point. This is the lower low. From this point to this point, there was a sell trend and a pattern of lower high and lower low. After putting this lower low, the market has made this lower high, right? This particular lower high. After this lower high, it has posted this lower low, this lower low, lower, this is the lower low, lower high, and again this is not the lower high, this is the higher low, this higher low, right? So if you have found this situation in a sell trend, you don't have lower high and lower low. This is the lower low, this is the lower high, and again on this point or somewhere it could have been the lower low, which should have been breached on this point, but it didn't, and the market has reversaled, right? When this sort of situation comes, put your trend line and draw the which connecting the 2 points. This is the lowest low, this is the swing low, right? Higher low. Remember, this upward trend line is for sell. You getting my point? This upward trend line is for sell. Every time when you need a sell, the trend line angle should be up, as this one in this candle. Okay, on what when this trend line is broken on this particular point, the trend line is broken and below this trend line, so I'm gonna sell on this point. If I were on this point, I would have been on sell, so my sell entry would have been on this point. So where is now my stop loss? My stop loss always been over the previous swing high. Where was the previous swing high? In this scenario, the previous swing high lies over there. So my stop loss would be on this point, whereas my entry was on this point. And whatever I risk, the at least double amount of reward would be required by me for this setup and for this trade. So if I'm gonna sell on this point, my target would be at least double than the risk which I'm taken from this market. Okay, as you can see, when the trend line broken, there is a lower low on this point. This is the low, this is the high, lower high. Again, this is the low, this is the high, lower high. Again, this is the low, lower low, right? At this point, now I'm gonna view of previous swing high, because it may be a compression or reversal of the trend, right? This is the lower high. So after putting this on a risk, the second scenario is as I have always been said in my previous videos about the trailing stop. So your trailing stop initially were on this point. When market has made this low and this high, then your stop loss would be on this point. After making this lower low, this was the lower high, your stop loss would be there, right? And as long as at the time of now market hasn't breached this swing low lower high, right? So even if you follow this setup, go sell as long as this previous swing high persists. Getting my point? So what I'm going to do, as I need to see this market for about 1 month, so I put my TP over this, the major swing low, the lowest point. I have a firm belief that this market would be reached on this point, right? You may have another trend line, as after posting this lower low, the market has posted this lower high, so you have to draw another trend line for another fresh sell order, right? This is the lowest point, right? This swing low point. This is also the lower point, the swing low point, right? I connect with trend line. When the trend line will be broken, probably on this point or on this point, go short. After short, your stop loss would be originally right over there, because at this point the major swing high has posted this one, right? So if you're following this setup, you need to have wait and see policy. When the market will break this trend line, go short, stop loss would be there, and your reward would be at least the double one, right? Either the double one, what you're risking, or the previous major swing low. This major swing low is over there. So you will have two options if the market break this trend line: sell, stop loss, TP either from either double of this stop loss or this particular lowest point. So this is my trade. If you have any question or query, please don't hesitate, just ask to me. And if you like this video, please subscribe. Thank you very much.